One of the biggest lies we're told is that saving money is always the smart thing to do. But here's the truth. Saving is not the same as growing. In fact, with inflation climbing year after year, your money is actually losing value sitting in the bank. In this video, I'll show you 8 real assets that can beat inflation and grow your wealth, even when the economy's burning. Let's get into it. Number 1, stocks. When you invest in a stock, you're not just buying a ticker symbol. You're becoming a partial owner of a business. Imagine a company that makes soap. As inflation drives up the cost of raw materials, the company raises the price of its soap. Customers still need soap, so they pay a little more. The company maintains or even increases its profit margins. Those profits are reflected in higher earnings, and higher earnings drive up stock prices. From 1926 to 2024, the S&P 500, which includes companies like Apple, Coca-Cola, and Microsoft, returned an average of about 10.1% annually. Even after adjusting for inflation, the real return is still around 7% per year. You can start with broad market ETFs, which are like baskets of stocks that track an entire index. Here are 3 to look at. VOO tracks the S&P 500 US large cap companies. VTI tracks the entire US stock market. VT gives you global exposure across developed and emerging markets. Number 2, real estate. According to the Federal Housing Finance Agency, FHFA, US home prices have grown by an average of 4 to 6% annually since the 1990s. Even when adjusted for inflation, the real return has consistently remained positive, especially when combined with rental income. With just 20% down, you control 100% of the property. So if your $300,000 property goes up 10% in value, your equity increases by $30,000, even though you only invested $60,000 up front. That's a 50% return on your money, not including rental income or tax benefits. You can still get real estate exposure through REITs, real estate investment trusts, companies that own and manage income-producing properties. Many pay regular dividends. Examples include O, Realty Income, known as the Monthly Dividend Company, VNQ, Vanguard's Diversified REIT ETF, PLD, focused on logistics and warehouse properties. Number 3, gold and precious metals. For centuries, gold and silver have outlasted empires, currencies, and crashes. In 1930, 1 ounce of gold was worth about $20. In 1971, when the US left the gold standard, it jumped to $35. Fast forward to today, gold has breached $3,200 per ounce. And analysts like Prime XBT forecast it may hit $10,000 by 2032. In fact, during every major inflationary crisis, from Weimar Germany in the 1920s to Zimbabwe and Venezuela more recently, when paper currencies became worthless, gold preserved wealth. And it's not alone. Silver is often called the poor man's gold, but don't underestimate it. Silver is used in solar panels, medical devices, EVs, and electronics, making it both a precious and industrial metal. Platinum is rarer than both gold and silver and is vital in automobile catalysts, hydrogen fuel cells, and jewelry. You can invest in precious metals through gold ETFs, like GLD or IAU, which track gold prices, silver ETFs, like SLV, mining companies, like Barrick Gold or Newmont Corporation, NEM. Financial experts typically recommend allocating 5 to 10% of your portfolio to precious metals. Not to get rich, but to protect what you already have. Number 4, commodities. Commodities are raw physical assets, like oil, natural gas, wheat, copper, corn, steel, and lithium. In 2008, when oil prices hit nearly $150 per barrel, inflation across the globe surged. Then, in 2022, during global supply chain shocks and the Russia-Ukraine conflict, oil jumped again, from $65 to over $120, reigniting inflation fears worldwide. Now think about copper, aluminum, and nickel. These are used in electrical wiring, construction, electronics, wind turbines, electric vehicle batteries. From 2020 to 2022, copper prices surged from around $2.20 per pound to over $4.70 per pound, a 113% increase in just 2 years. Then there's wheat, corn, soybeans, and coffee, which directly impact the price of food. When food prices go up, inflation goes up. And so do the returns on agricultural commodities. Here's how you can gain exposure. Number 1, commodity ETFs, DBC, Invesco DB Commodity Index Tracking Fund, tracks a mix of oil, metals, and agricultural goods. Weight, tracks wheat prices directly. Number 2, mining and resource stocks. You can also buy shares in companies that extract and process commodities like Rio Tinto, Diversified Mining, iron, copper, aluminum. Archer Daniels Midland, ADM, a global food commodity company. Number 5, TIPS and I-bonds. TIPS are US government bonds that actually adjust their value with inflation. Every 6 months, the government adjusts the principal of the bond based on changes in the Consumer Price Index, CPI. If inflation rises, your bond's value automatically increases, and you earn interest on that new, higher value. I-bonds, which made headlines in 2022 for all the right reasons. When inflation spiked after the pandemic, I-bonds offered an eye-popping 9.62% interest rate, all guaranteed by the US Treasury. With I-bonds, your interest rate adjusts every 6 months. Part of it is fixed, and part of it rises and falls with inflation. Both TIPS and I-bonds are backed by the full faith and credit of the US government. That makes them virtually risk-free from a default standpoint. You can buy TIPS through your brokerage account or through ETFs like TIP or VTIPE. As for I-bonds, you buy them directly from the government at treasurydirect.gov with as little as $25. Number 6, farmland. People will always need food. Whether there's a recession, a war, or a tech boom, the demand for food doesn't disappear. And what do we need to grow food? Land. From the early 1990s to today, farmland in the United States has delivered an average return of over 10% per year, combining both land appreciation and rental income. When you own farmland, you can lease it out to farmers who pay rent every year. That rent provides a steady income stream. This is why big institutional investors, family offices, and even billionaires like Bill Gates are quietly buying up farmland. In fact, Gates owns over 275,000 acres across the US, making him the largest private farmland owner in the country. Platforms like AcreTrader, Farm Together, and Harvest Returns allow everyday investors to buy fractional ownership in real farmland. Number 7, investing in yourself. Imagine you take the time to learn a skill, like copywriting, video editing, or digital marketing. Within a few months, you could start freelancing online, bringing in an extra $500 to $2,000 a month on the side. What if you build a YouTube channel? It doesn't require millions of dollars in capital. Just your knowledge, your voice, and your commitment to show up. You create videos that educate, entertain, or inspire. And over time, that channel becomes a digital asset. That's printing money from your own ideas. Books, courses, mentorships, online communities. These are investments in your future income, your independence, and your ability to thrive no matter what the economy looks like. Number 8, Bitcoin. When people hear Bitcoin, they often think of hype, scams, or overnight millionaires. But beneath all the noise is a very simple idea: digital scarcity. In fact, over 40% of all US dollars in circulation today were printed in just the last few years. Let that sink in. Now imagine a currency that no one can print, no central bank controls, and that has a hard, fixed supply. That's Bitcoin. There will never be more than 21 million Bitcoins, ever. It's written into its code. No printing, no manipulation, just math and consensus. Bitcoin went from being worth less than a penny to over $60,000 at its peak in 2021. That's not a typo. That's over 100 million% growth in just over a decade. Today, institutions like BlackRock, Fidelity, and even governments are beginning to embrace it. Countries like El Salvador have even made Bitcoin legal tender. Many smart investors allocate just 1 to 5% of their portfolios to Bitcoin. You can buy it easily on platforms like Coinbase, Binance US, or invest indirectly through ETFs like Buy2 or iBit.